Well, g'day, it's Scotty North, and this is Zenium Live, where we talk all things money, finance, and property. And we had a week hiatus last week, and as you can see, we completely redid the set and moved it around. Only the train spotters will be able to see the difference. In fact, there is no difference, but it's a big job when you've got to move like 1,000 books from one end of the studio to the other. But nonetheless, we did it anyway. All right, I've got a pretty exciting couple of shows this week. We've got a great one today, and our final show of the year is on Thursday, where we're doing a wrap-up of all things that we went through on the year, and it's a bit of a holiday treats for you, so keep an eye out for that one. Well, on today's show, I have a very special guest who I'm told actually invented the term fake news, and that he auditioned and just missed out by a couple of hairs on his head for the role of Cue Ball in the 1946 Dick Tracy film of the same name. The maven of messaging, the founder of hotspotting.com.au, I'm referring to none other than Mr. Terry Ryder. Terry, how are you doing?
I'm very well, thank you. As always, I'm reeling from the introduction that you've given me, but I've recovered.
Good. Well, it's quicker than other weeks, so I'm glad you're getting used to it. It's good to see that the skin's toughening up. So, how have you been the past month?
Look, it's been good. It's kind of been a reflection of the year that we've had. The year has been incredibly busy for the right reasons. It's been a strong and profitable year, which is a reflection of the fact that out there across Australia, most parts of Australia, markets have been very busy, very competitive. There's been lots of activity, and therefore lots of demands for what we do, the reports that we create to help people decide the best places to buy.
Well, there you go. I think we're having trouble. Have you got us, Terry, or we're having some internet issues?
Well, I can see you and I can hear you, and I can see myself.
Really?
And hear myself. Yeah.
Well, one of us hasn't paid our bill, and I know that you love Telstra, so maybe it's not me.
Yeah. It all appears to be normal from where I'm sitting. Because you obviously moved to your studio and you're playing
no, the internet. Right. Yeah, that's maybe the internet part didn't actually move, but anyway, that's good. So look, what I wanted to discuss with you today was the new report. Like, it's pretty recent. When did you bring this one out? December 2020, called the Ryder Report: What to Expect in 2021. Mate, do you want to tell us a bit about that?
Well, the Ryder Report's our national newsletter. We publish it every 2 months, and this is our December edition, and because of the timing, it's appropriate to kind of review the year that's been and to look ahead to what to expect in 2021. And we think that 2020 has been a remarkably positive year, all things considered, and but we think 2021 is going to be even better. We think it's going to be something very like a nationwide property boom. We think that it's already underway in many parts of Australia, and I know that not only ourselves and other specialist real estate analysts are kind of forecasting that, but some of the more negative forecasters, like the bank economists, are also predicting some substantial price growth across the board next year. So it's going to be a big year for real estate consumers of all sorts, I think.
Look, I think that you're right. I mean, you've been saying that for, quite a number of months now. Is that, I know you do your Ryder Report all the time, but was that a big, I guess, decision factor in how this report was put together? I mean, is this this seems a little bit different from your other reports. Is there a big focus on what has been and what is now to come next year?
The focus is really about what to expect next year. There's been, this time last year, or say March, April at the start of this year, there was a lot of uncertainty created by the sort of circumstances that we'd never really experienced before. And there was quite a lot of negative forecasting, and it was all proven to be incorrect. Real estate sort of not only held up very well, but it actually performed very strongly. And we've seen price growth in most places across the country, both capital city and regional, throughout the year. Melbourne being the big exception for fairly obvious reasons. So that's the background against which we seek to analyse what we expect to happen in 2021, and looking at the factors that are the dominant forces in real estate markets right now and the ones that are to come. So we expect to see a continuation of some of those factors that have been influential this year, such as the exodus to affordable lifestyle, such as the activity of first home buyers and the very low vacancies that exist in most parts of the country, putting upward pressure on rents and subsequently prices in many parts of Australia. And what's to come next year, the big thing that we haven't really felt yet, but I think we're going to feel big time next year, and it's going to make a real estate boom all the more certain, is the infrastructure-led economic recovery that's being planned and proposed by state and federal governments.
Yeah, well, I mean, when in doubt, spend money, right? So I've just kept it on this. The index of your report here. So there's a lot of these areas. You cover all the key areas in Australia. Is there any one in particular that you wanted to jump to for a time and have a bit of a look at? What would be something that perhaps wasn't in last report, is now, or something of interest?
Look, I mean, one of the things we focused on in the feature article was what we calling the rental shortage crisis. We really have a dire shortage of rental properties in most parts of Australia. The reason why we're not really hearing much about it is because the two places that don't have that shortage are Sydney and Melbourne. And most of our major media comes out of Sydney and Melbourne, and they're generally quoting economists who are sitting in Sydney and Melbourne, and they tend to think that what they're seeing in their backyard reflects Australia. In actual fact, it's the exception to the rule. The rule across Australia is not only low vacancies, but ridiculously low vacancies. On the screen there, you can see in the red panel a snapshot of selected locations, and we haven't cherry-picked the worst. These locations are actually indicative of what we're seeing right across Australia in regional centres, but also in many of our capital cities. 5 of the 8 capital cities have vacancy rates well below 1%, and then Brisbane is just under 2% at the moment. The only places with vacancy rates above 3% are Sydney and Melbourne, and even parts of Sydney and Melbourne have very low vacancies. So, but it's really is a crisis, because I mean, I know supporting or backing up the statistical data is the anecdotal evidence, the conversations we're having with real estate professionals and consumers across the country every day, showing that, you know, whenever a decent or even not a particularly decent rental property is made available, there's an open house, there's 30 or 40 or 50 people queuing up, competing for it and offering above the asking rentals to secure it. This is happening right across Australia, and there are some desperate people out there because they can't find anywhere to rent. They keep getting gazumped by other candidates. They think, well, maybe we're going to have to go to a caravan park, but they're full as well. There are really dwindling options for people who can't get a rental when they desperately need it. And one of the reasons is that investors have been out of the market by and large for the last couple of years, and they continue to be, for some reason, reticent to get in the market, and they're missing a massive opportunity. It is a great time to be a landlord in Australia. Not only are prices rising in most markets around the country, but you've got these incredibly low vacancy rates, which means rentals are rising. And you can command a very, very strong rental, far more than most people might imagine, if you own a rental property in any of these places. And that's really most of Australia that's in this position.
So when was the last time in your memory, because you've got a pretty good one for this, you've been doing this for a while, where across the board, pending, those two, Sydney and Melbourne, where we had rental vacancies so low? Has there ever been a time before?
I don't think so. Not in my lifetime, not in my time as an analyst of real estate markets, which goes back more than 35 years now. But we've also seen this commentary coming through in some of the sources of statistical data, saying that in many, say, for example, regional Queensland, most parts of regional Queensland, they've got the lowest vacancy rates ever recorded, since they've been keeping statistics on that and going back decades. So it really is a unique situation. We used to think, anything below 3% is heading towards shortage. Below 2%, it's really short. But when you've got 0.3, 0.2, 0.4% vacancy rates, and that's the norm across the country now, it's ridiculously low, and it just means it's dire. Well, there's two ways of looking at it. If you're a tenant, it's a dire situation and really uncomfortable. If you're out there looking as a tenant, but if you're a landlord, you're in a very strong position. So I'm a little bit curious as to why investors are still largely sitting on the fence and not getting into this incredibly positive market. Any clues, Scotty? Why do you think investors are still not getting involved and taking advantage of this opportunity?
Look, I'd have to go with my gut feel and say that in general, investors are usually the first ones to pull back in certain markets, and they're sometimes the last ones to get back in. So earlier in the year, a lot of investment pulled out. I think it was survival of the fittest and fend for yourself and all that sort of stuff, and maybe they're fixing their own houses up in terms of metaphorically speaking. But I think there has to come a time when as you're saying, the rental vacancies are low, the rental returns are increasing. That's just an absolute goldmine for investors. There's no other way where they're going to be. They're going to be back in the market, and I think it's probably going to happen from next year. But I just want to put some things in perspective on these figures here. That's why I kept on the screen. Is see if I make them bigger for the people that want to make them see it even better. So what we've actually got here, these figures now. I'm not sure if it's 3% or 2%, but what's actually classed as a zero vacancy, Terry? Is it like 2%, isn't it?
Well, anything below 3% is, 3% is considered the benchmark as a balanced market. And once you get below that, you're starting to get into shortage.
Okay, so let's rewrite these figures, right? Because let's say it's 2%, so I can do it in my head. Then we're actually saying that in Bendigo, Orange, and all these other places, we're looking at a minus 1.6%, housing. If 2 is actually 0, right, balance, then below that, we actually start to go to a negative. The problem that I see with these rental vacancy figures, and it always has been, is that for people who don't really follow it closely, go, oh, well, they're low, but there's still something there, when in reality, that's not actually what those figures represent, is it?
No. And certainly not relative to demand. I mean, we really are seeing queues of people at any open house for an available rental, no matter what its standard is, no matter where it's located, literally 30, 40, 50 people every time. And, I know people have been, out there in that market competing with those sorts of numbers of people for available rentals and missing out every time, despite their good references and their credentials. And they might offer more than the asking rental, but somebody offers even more or offers to pay 6 months in advance. So the figures we just had on the screen in the red panel, that's effective means there's nothing available. Louis Christopher from SQM Research, I quote in the article, says Regional Australia has put out the no vacancy sign. They're almost zero in terms of rental vacancies. So, and one can only speculate about how dire it would have been if Labor had won the last federal election and scrapped negative gearing. It would be even worse than it is now. So what we really need from government is actual incentives for people to get into the market as investors, because we always need a pool of rental properties available for people who choose to rent or need to rent or can't afford to buy. There's all sorts of reasons why people might be renting. But we need an available pool, and in a comfortable market, we'd have like a 3% vacancy rate across the board, but we don't have anything remotely approaching that at the moment. So it's a crisis, but, we're not hearing about it, and government's not doing anything about it. So it's not going to improve.
Well, I mean, it's not. I was going to say that in terms of the outlook for next year, I mean, we can go to any other page in this thing that you want, but this is pretty topical. The outlook for next year is what we're looking at is if we take those vacancy rates and I guess, extrapolate them along, say how long was it going to take to build new houses? Why are we, we've still got some of those expats moving home. We don't have immigration, but they are pushing for students to come back in, etc., etc. Then those rental prices are only going to go one way. I mean, every single rental property hasn't had a rent review done in 12 months. Some of them are years and years. And if they come about now, they're going to jump up to, current market standards or whatever it might be if they change the tenant. My point being is that there's going to be some point in time where investors are going to have to come back into the market because they're just going to be drawn in by what's going on with the rent returns and the price increases and that sort of thing.
And the other thing that vacancy rates at those levels means is prices are also going to be rising, because what we know to be true, what we've observed over many years, decades in fact, of analysing real estate markets, is that when vacancies are low, rents are rising, prices follow. And we quite often see the pattern we quite often see is rents move first and prices follow later. So in these places, you cannot have vacancies at near zero without having an upward impact on property prices. So it's just another reason why investors should be getting into this market ahead of what I expect to be a boom in most parts of Australia next year.
All right. Well, with that in mind, we'll change the topic a little bit. So, forgetting the rentals at the moment, you have talked to us for about the past 4 months about regional Australia, and we've just been talking about that with the rentals. But we've now alluded to the price increases. Is it still a good time to be buying in regional Australia?
Well, it certainly is. I think the trends that we're seeing in many parts of Australian regional centres, they're only really getting started. The trends that are driving this have got longevity. The exodus to affordable lifestyle has been something that's been gathering pace for a few years. It's been significantly boosted by the era of the pandemic, the lockdown periods, which forced more people to work from home and made them aware of the possibilities. But it's really got some serious momentum now. More and more people are getting on board this trend, and so I think that's going to continue. We've also got other factors that are going to be driving markets. We're going to have a lot of infrastructure built in this country like never before. It's clearly been decided by federal and state governments that that's how a key way that they're going to generate economic growth and jobs and bring us out of that short, sharp recession and back to growth. And nothing drives real estate markets like infrastructure spending, but it's also going to create incredible demand for Australian resources. So we're going to have, well, some people say we have a resources boom, particularly with iron ore. Well, that's going to be enhanced by the infrastructure build that's coming up. Everything that can be fast track is going to be. And so there's going to be lots of economic impacts that are very positive, and that all feeds into real estate. As I said, I don't think anything supercharges real estate markets the way infrastructure spending does. So one of the things we've been looking at is where is it going to be built, and what sort of places are going to get direct benefit. And so that starts to inform our choices for our reports. And in this edition of the Ryder report, we always have, in each edition, we focus on 2 locations with a bit of detail. And one of those is the Monash City region of Melbourne, which is it's got wonderful infrastructure already, but it's going to benefit from expansion of the medical and educational precincts there, but also in particular it's going to be one of the places that benefits from the suburban rail loop that's getting underway in Melbourne. It's going to be the biggest infrastructure project ever in Melbourne by a wide margin. And then we also feature the Hunter region in New South Wales because we think it's boosted by those 2 prevalent trends, the exodus to affordable lifestyle and also this infrastructure boom, because a number of big infrastructure projects are focused on the Hunter region in New South Wales. There's any number of other places we could focus on. One I particularly like is Toowoomba in Queensland, which one reason I like it is because I can see what's coming and it hasn't really got frenetic yet. Many of these regional markets already are very, very busy and competitive, and property selling very quickly, which is a bit of a problem for people trying to get into the market because things get snapped up so quickly. Toowoomba hasn't got to that point yet, but I think it's going to in 2021 because it's got the new airport, it's got the second range crossing complete, it's got the Inland Rail Link $9 billion project under construction heading its way soon, and a whole lot more. And it's a place people might move to for lifestyle that's affordable, as well as all the jobs that are going to be generated by this big infrastructure boom.
Not sure if you're still there or not, mate.
I can hear you. I can see. Yep, there you go. So I can see you and I can hear you, Scott. I can see and hear myself.
Oh, you're back. I'm back.
You never left, from my perspective, although you are freezing a little bit.
Yeah, I don't know. It's a bit weird. Yeah, so are you. It's mate, it must be school holidays or something. There must be kids around gaming or something weird. Not at my house, but
well, maybe the weather. We've had some pretty wild weather in this part of the world over the last 3 or 4 days. So maybe that's interfering with.
That's true.
Yeah.
Mate, the one poor copper cable between Brisbane and Sunshine Coast is probably like half broken, snapping in the wind. So, mate, we've got Bill's jumped in on the comments and said he's made a comment about Parramatta. So he's got the market is now very segmented. Parramatta has about 60% of properties that are rentals, with close to 2,000 vacant properties now. Rents have dropped 20% in the last 12 months.
Yeah, no, that's right, and I don't think it's so segmented. I mean, there's always exceptions to the rule, but I think a place like Parramatta is very much the exception, and the sorts of places we're talking about are the rule. Most places do have these very low vacancies, but as we pointed out early in the discussion, Sydney's an exception to that, but not all of Sydney, some parts, and the parts that are a major exception to the rule of low vacancies are those parts of Sydney that have a lot of high-rise apartments, and Parramatta is obviously one of those places. And Central Sydney is also. We sort of in our price predict index, we're just completing this week, in fact, where we analyse sales activity and prices and vacancies for every town and suburb in the country. We actually have some of these markets classified as danger markets. They are the exception, however. That I think the problem is, media coming out of Sydney, which is a lot of it, they focus on what's happening on the back. They focus on the negatives. They're highlighting those places that have the big vacancies and the falling rentals. And I've seen headlines today in our research pretty much inferring that high vacancies and falling rentals is the norm across Australia, because that's what's happening in selected parts of Sydney. But in actual fact, it's very much the exception. And it's important not to be distracted by that. You've got a whole big country out there as investors. You can buy anywhere in Australia. Ignore what's happening in those places and have a look at what's happening in Adelaide, in Brisbane, in Bendigo, in Orange, in the Sunshine Coast. In the Moreton Bay region in the north of Brisbane, most of Australia, very low vacancies, rents rising, and big momentum in sales.
And that's right, that anecdotal stuff that we're talking about, we see that. Yeah, for sure. We see all that stuff with the anecdotal evidence and the real data. So on that note, we want investors to come back in and start, helping to provide some of that housing. I think you and I both agree that not only does it need to happen, it's probably going to happen from early next year. Mate, that's where we come together and did our property hotspot thing, right? So where we can actually find the right properties in the hotspot locations for investors. Yeah,
investors do need to be getting into the market, and we do need to be building new house and land packages. One of the reasons we have these shortages, as well as the inactivity of investors, is the fact that for the last, say, 3 years, we haven't been building anywhere near as many new dwellings across Australia as we need to. there was a kind of a spike. This 2016, 17, there was big construction of new dwellings, lots of apartments, and then it fell away very sharply. So we haven't been building a lot of new product. And so, we need investors to be the catalyst for that to happen, to buy, new house and land packages in good locations, like some of those we mentioned. The Sunshine Coast is one of them, but, right across Australia, there's a shortage in most places. And investors need to be the catalyst, not to do the right thing by the nation, but it's a hell of an opportunity right now for people to take hold of.
Look, I agree. So, for those of you who don't know, after much discussion and backwards and forwards, we were able to access all Terry Ryder's information, and he can give us some guidance on the places where we went and looked for these house and land packages, and we've compiled them on our website, which is propertyhotspot.com.au. And you can go on the front page, click on properties, and it takes you to all the listings that are there now. And as Terry's saying, it's all in these hotspot locations: Sunshine Coast, North Brisbane. We got that Moreton Shire. We got where else we got? We got down south. We got Adelaide. Any of that stuff at Ballarat, all those sort of places that Terry talks about in his hotspot locations reports, we can access with the property hotspot service. And to be honest, the take-up has been, when we talk to people, they like it, right? I mean, it takes a lot of that stress away when you're looking for a property, that someone's already done the research, like Terry, and then we've done the research on the building and the actual land and that sort of thing, put it together. There's a pretty good packages and pretty good outcomes for clients.
Yeah, and the really important part is that they're in those selected locations. You mentioned Adelaide. Pretty much every postcode in Adelaide's got a vacancy rate below 1% at the moment, and rents are rising strongly. It's a very active market, and prices are moving too. The CoreLogic data show we've actually got a section on the Ryder report that we've been focusing on today, where we look at what's happened in every market jurisdiction in Australia for the last 9 months, month by month, with prices. And it shows that Adelaide's had growth in 8 out of the last 9 months, and it's median house price. So it's just been a pattern of growth right throughout this pandemic period, which many people would find almost unbelievable. But in actual fact, it's been pretty close to the norm in Australia. Canberra's had growth every single month, all of the 9 months, and Adelaide's had growth of 8 out of 9. Some of the regional markets have done similar. Brisbane's had growth 7 of the 9 months. You can see there the month-by-month figures from CoreLogic showing that only Melbourne and Sydney have had months, a significant number of months of decline. Once again, Sydney and Melbourne are the exceptions to the national rule. The national rule has been a pattern of growth, and on the right-hand side in red, in that table, you see the annual growth figures, the figures for the year to December. And, Darwin's up 9%, Canberra's up almost 8%, regional New South Wales 7.5%. It's pretty solid growth. Regional Tasmania more than 10%. I mean, in a year of pandemic, which has caused a technical recession in this country, for real estate to have that level of growth is pretty extraordinary, and it gives a clue to what we might expect in 2021, given everything that's building. Because I think the figures we have on the screen are a precursor to an even bigger year in 2021, when all the stimulus spending from state and federal government starts to feed through economies and property markets. It's going to be a hell of a year. I think it's going to be one of the most dynamic years we've ever experienced, and I'm looking forward to it. A short break at Christmas and then get into it. It's going to be really busy, I think, and I think investors are going to have to get off the fence and start taking advantage of the sort of opportunities we're talking about.
I agree. I agree. It reminds me of a time in, what is it, 04-ish, somewhere around there or a bit before, when you'd say to some people, look, the market's moving, you should be doing something, you should be getting in. Oh, well, wait and see. Well, they wait and saw and they missed it, right? It went up.
Yeah.
And you just sound like a real estate promoter, a spruiker in that regard. And I don't often say that sort of stuff, but this is the same sort of recipes that we're seeing now.
There's people out there who will always have an excuse not to take action. They want to wait and see. They want to see what's in the federal budget. They want to see what the Reserve Bank does with interest rates. It's just procrastination, making excuses for inaction because, for a lot of people, it's quite hard. It's a big decision. It involves a lot of money. It's a leap of faith to a certain degree. And people like that will probably never take action. 10 years from now, they'll still be waiting and seeing. But, I just think it's a time of opportunity. And it's been that way right throughout this year. But the opportunity, if investors don't act soon, they're going to miss the best opportunities because owner-occupier buyers are certainly taking the opportunity. First home buyers are at their most active for more than 10 years. They're more than 40% of owner-occupier buyers right now in the market, and that's the highest level since 2009, I think. So they're out there in force, and where their buying prices are rising, other owner-occupiers are out there in force as well. They're moving from the city to the country areas and that kind of action. Investors are just sitting around with their arms folded, waiting for someone to ring a bell and tell them it's okay to get into the market.
Yeah.
And,
Well, that's it. They're waiting for the bell to ring. You're spot on. That's exactly what they're waiting for.
Yeah. By the time the bell rings, they've just missed out, I think, or they've missed the best time to buy.
Yeah. I think it's going to be an interesting year, very, very much so. Look, Terry, thanks for joining us today, and thanks for joining us this year. You're going to need a break at Christmas to get over the amount of love shown on the show when you come on. I'm sure you'll be able to try and come back next year.
Yeah, I certainly need a rest from the amount of work I've done this year. It's been a really busy year, busiest I've ever been, and mostly for very, very good and positive reasons. And I'm basically knackered, mate. I do need a break, but a couple of weeks off and I'll come back refreshed because I am really expecting 2021 to be one of the biggest years ever. Looking forward to it.
Are you actually going to have a proper break? Or are you going to go and have a break and write another book or something?
Look, I'm going to be around. If anyone got any inquiries, if the media wants to do an interview, I'm available. But the next couple of weeks generally are very ones of where I don't need to do a lot in the business, but at the same time, there's a lot of people out there buying reports, and it's what happens at this time of year. I think a lot of people assume it's a dead time for real estate. It's not. It's actually, for our business, we do a lot of sales during this period because people have time, they're at leisure, and they're often holidaying in sexy places, and they tie-kick real estate. They're on the Gold Coast, and God, this looks good. But they might actually make some poor decisions in places like that. But, they might be on the Sunshine Coast, they might be on the Surf Coast in Victoria or on Byron Bay with time on their hands. And so, it is a time when people actually do sniff around real estate more so than they've been able to do throughout the year when they've been at work and been very busy with kids at school and all of that. So I'm expecting that to be even more so this year because, we've got people coming out of lockdown, relaxation of restrictions, the borders have been open, and people are just celebrating that. So I think we're going to have people out and about having a good time, spending money in cafes and restaurants and starting to show even more interest in real estate. So, yeah, it might be a busy holiday period.
Yep, I agree with you, mate. I think it's going to be a very busy one indeed. All right, well, thank you very much for joining us. I appreciate it, and I look forward to our chats again next year in 2021.
Okay, mate, it's always a pleasure.
All right. Well, that is Terry Ryder from hotspotting.com.au. And if you haven't got it, you need to get it. You jump on his website, hotspotting.com.au, and download his new report, which is the Ryder Report, and it tells you everything to expect in 2021. Okay, so what to expect in 2021. Brand new report from Terry Ryder. It's definitely worth a read. It is a decent size report, 26 pages long, and it is worth every single cent that you pay for it. I'm not giving it to you for free. You should be paying for it and support Terry because he does good work. And thank you for everyone who's logged on. Thank you for Bill, who's given us some comments today. Appreciate that, Bill, for chucking the comments in there. Very good comment. And of course, if you're listening to us live or on the re-record afterwards on our Zenium Live podcast, you can always hit us up for any information there. Go to www.zenium.live. That's it, no .coms, no .aus. That's the website. Or hello@zenium.live. That's it, HELLO at zenium.live. And you can hit us up for any comments, questions, or future podcast and show ideas. I have one more show left for the year, which is on Thursday with PJ. We do a wrap up for 2020, and that's going to be a pretty fun show. So don't miss it at lunchtime on Thursday. And I think that is about it. Been a big year already, and like Terry, I'm a bit tired. I might have to go and have a bit of a nap, I reckon, because it's that time of the day and I haven't had lunch yet. So enjoy your lunch, all those people been watching, and I will see you again on Thursday. This has been Zenium Live. We talk all things money, finance, and property, and I'm Scotty North. Till next time.